Hello everyone and welcome to today's course at Quality FX Trading. We are looking to the next subject in the series of learning institutional trading basics. And this time we are going to talk about source, breaker, and order flow, which are the important elements when you are trading using the institutional trading methodology. I will start talking about this subject by giving you an example, and then we will learn about each one of these one by one, and I'll give you some points about each and some definitions. Then in the second part, I will show you some screenshots, which are the examples, and we will go through each example, and I will make it clear for you how this is going to work in practice. So let's start by giving you a price action. When we have a bullish candle and we see the price is pushing up, and then we will get a bearish engulfing candle, as you know, and as per our previous course, which we were talking about order blocks. So you know that this one is an order block. This is already clear for you. So when we have such price action, and in the next move, we see another bearish move, and then this bearish candle has a wick. Okay? So here, the price will reverse, and then we will get a bullish price action. And this is kind of retest we have here. So we had a bearish order block, the price moved down, it gave us a candle here with a wick. So the wick, this is the lowest part of the wick, then the price pushed back to retest of this order block. So as per the last discussion, we said here the price has the chance to move down because we had an order block, we got the retest of the same order block, and now we can think about selling this price action. Now, if I want to talk about order flow here, definitely the order flow can be determined by looking to the big picture in each time frame. So order flow is something that you cannot rely on thinking about it, but just looking at this small part of the price action. We should see the whole picture in each time frame. As an example, just consider we are looking to dollar CAD and time frame is H4. Okay, so here instead of getting retest, we may get another push up like this and closing above the order block which we had. So we know in this case, this order block will be invalidated And in this case, we are calling this order block. I will make it yellow to show you this order block is called breaker now. So basically, by definition, we can say breaker is any invalidated order block which can change the structure. So this is about breaker. Once we get this breaker, then we will identify this candle which has the highest wick. This candle, we will identify this candle with the highest wick to the low side as source. So again, by definition, we can say source is the highest wick candle after having a breaker in price action. So here we got breaker and source. So when we got such a structure, I mean pushing down, coming back to retest, retest is getting failed, and the order block is invalidated. So this OB is becoming breaker, and I'll highlight it as yellow as a color codes we are using in quality FX trading. And then we will consider this candle with the highest wick, okay? In the practical example that I will show later, we may have another candle with the less wick, but we will consider the highest wick as the source part, okay? And we can consider the whole candle as the source. But the important thing is the lowest part, because this part here down, this part is going to be very important level, because in case if the price is going to push down again and closing below the source, then again we can consider the structure change. Okay, so if we are going to close below the source, again the structure which will change, but we may get a retest of the source and then continue in the direction of the trade, in the direction of price action, which was identified recently by this structure change. The structure change was the cause of this order block and this breaker. So now we talk about everything except the order flow. So let's go to the order flow now. We will continue the price action here. If we continue the price action here, and we may get a bearish price action like this, and we consider this as the retest of the source. Okay, so because source is becoming a bullish order block now. Remember, this OB was bearish before. Once invalidated, it became bullish OB. At the same time, we call it as breaker. So we are getting the retest of the breaker, and then we may push up, or we may go down to retest the source as well. So there is a possibility to retest the breaker only, and if we are going to get a bullish order block here, then we consider this as buy, because we got the retest of the breaker, and we can see the confirmation as another order block bullish here inside the breaker. So we got the breaker, we have retested the breaker, and then we got a bullish order block inside the breaker. And this is a high possibility, high probability trade to the upside, because we got a source, we got a breaker, and we got a bullish order block inside the breaker. And here we have the order flow is the direction of price action in a specific time frame determined by the breaker and source. So this is the order flow, which of course the order flow can be either up or down. So we can have either upside or downside, and definitely we can see the order flow in this case, of course, it's a buy. So here, as a review, I can tell you this is the source, this is the breaker, and this is the direction of the trade to the upside as up. So now, by definition and the basic things, we know what is source, what is breaker, and what is order flow. So I'm going to continue with the same example, and then I'll give you one more example. So here we may have another push up. So here after that bullish we got, we may have another one to push it more up. And then here we may get a bearish one, another bearish, then we may push up, and in this case this candle is going to be with the wick. So as you can see here, the last order block bullish is here, correct? So here we are pushing the price to the upside. The direction of the order flow is up. So let's see what will happen next. Next, we will get a bearish candle. Something like that. And then we get another bullish one. But it's not engulfing the previous one. So we don't call it as OB. And here what will happen? We will get a bearish engulfing candle. And then here we have this as a bearish order block. And the next move is going to be like that. So we can see the previous bullish price action, the previous order block, the last order block which moved the price up, it is broken, and this bearish candle, it closed below. So by definition, breaker is any invalidated OB which can change the structure. Okay, and here actually I can just add something here. Instead of any, we should mention last invalidated OB in the direction, because here this was the last push in the price to the upside. Okay, so this was the last order block to the upside and it got invalidated. So now I'm sure all of you can know what is this order block. It is a breaker. That's why I will make it yellow as the color code in quality FX trading. Any color, doesn't matter. It's a breaker now. Because the last bullish order block has been validated by this candlestick and it closed below that. So right now, we can see this bullish candle is the highest big candle after having breaker in price action. So we can consider this candle here with the highest wick as the source. And right now, in the next move, we can have a small retest, something like this. And even it can come up to retest this bullish order, this bearish order block. Doesn't matter. As long as we have the breaker, we can retest everything up to the source. Until then, the structure won't change. And then we can have a bearish order block here, which is another confirmation to sell. So here we can see another bearish order block. And of course, the order flow is to the downside now. So right now, the order flow is down and is not up anymore. So now you should know that trading Trading is all about moving price between from source A to source B and so on. So trading is all about moving price from source A to source B and so on. As you can see, we got a source here. We went up to this source, so source to source. So if I call this one as source A and this one as source B, so we can see trading is all about moving the price between source and A and to source B. And then from the source B again, it can come back to source A, or it can get any other structure in between. And even we may have, for example, source C somewhere here. And after getting source C, it can go again up to source D and so on. But remember, when we are getting source A and source B, anything between these two is a source to source trading. So here, the source C, it will be created only if we break above source B. Otherwise, we will keep playing between source C and source B. This is maybe a little bit difficult to understand, but I'm sure by time you will learn how this works. But in general, you should understand trading is all about moving the price from one source to another source. And what is making these sources happen is just a breaker. So whenever we get a breaker, then we can have a source above or below. And remember, the whole thing we just explained is the important thing to consider is the time frame. So here we have the H4 time frame. So if we are saying order flow is up in the H4 time frame, it's only for this time frame. We may have another order flow in the daily and in the weekly. So dollar CAD can be up in the weekly, can be up in the daily, but can be down in the 4-hour chart and can be up in 1-hour chart. Hope this point is also clear. So we reach to the second part of the course, which is I'm going to give you some examples using the screenshots which I have. I prepared 3 examples which I will explain in details. Please bear with me for seconds. Okay, so let's go to the first example, which is the 1-hour chart. Okay, we can see the 1-hour chart for the euro dollar. So as you can see here, we got the last order block here to the upside. So this is the bearish candle pushing the price up. We got a candle with the highest wick and it came down. It was just playing here, and then at the end we see here this is broken and we got the breaker here because this candle closed below. And remember here all these wicks are below this wick, so we consider this candle as the highest wick candle, and that's why we call this one source. Otherwise we could have source here, and these two are the bearish order block. Remember this time frame is H1 and we are getting two order block, normal order block, bearish order block here, last push up, down, last push up, down. So this is the bearish order block and this is the breaker. So once we get this breaker, here the total structure changed from up to down. So from this point onwards, we will look for the retest of breaker and then down we go because the order flow is down now instead of up. So we have a down order flow. Let's go to the next example, which is the second example. Second example, which we have here, in this example, we have CAD JPY in the 4-hour chart. So we can see the order flow is to the downside, price is pushing down. Here we got an order block, is pushing down again. And as you see, here we got another bearish order block to the downside, and then we got this candle with the highest wick. So we don't call this source, of course, until we get the breaker. So remember, always you should identify breaker first, and then you should identify source. So breaker, then source, and then, of course, once you have the breaker and you have the source, you know what is the order flow. So here, this price is pushing down again, pushing back up, and this one here is becoming invalidated, and here we can see this is becoming breaker, and here we got a bullish order block as well. So we have the bullish order block, and here we got a breaker, price push up, push down, and we got another breaker here, as you can see. Sorry, another bullish order block here. Yeah, and then you can see the price pushing up, coming back down to retest this order block, plus visiting breaker again to push back up. So one thing which is very clear here is the order flow. So here the order flow was down. Here we had the order flow to the downside. And then once we got the breaker, we got the order flow to the upside. Hope this is also clear. We will answer the question at the end of the course. for those people who are attending the course live. So let's go to the last example of this course. In this last example, I'm going to show you a daily chart for Aussie NZD. As you can see in this example, which we have it for Aussie NZD, again, we have a down order flow, down price action. So the price is pushing down, pushing down, pushing down. And here we have the structure change happening. We got a source, but of course, as I told you, we will identify breaker first. So this is the candle which caused the last push down. So bullish candle before major down. So this is a bearish order block. After this bearish order block, the price coming up, closing above this candle. So the last bearish candle order block is becoming invalidated. So as per definition, any last OB invalidated, it will become breaker. So here we have breaker. Once we have identified this as breaker, then we can see that this candle has the highest wick to the downside. So we will identify this part as the source. And beside that, we have another nice confirmation because in the same price action, we are getting a bullish order block. As you can see, this is the push down, and then we are getting engulfing bullish candles, 3 in a row, which is a very good confirmation to buy. So once we see this price action to the downside and this bullish order block, and we have a breaker, so we are getting the retest of breaker, and here is the best place to buy and see what will happen. So the order flow is up now. It was down, we got the structure change, and we got the breaker. We identify both breaker and source, and we got a bullish order block inside. And of course, if you pay attention, you will see another bullish order block here, which is not retested yet. So the price has the potential to come back down, but remember, because the order flow has been changed, so our bias will be to the upside. So once the price comes down, we will buy this market again and again until the source, until the price closes below the source, which we can see another, which actually it will invalidate this structure, and it can lead to the next structure. Okay, this was the last example in this course. Thank you everyone for watching this course, and hope we will have the next courses and you will learn more and more with quality FX trading day by day, and we want everyone to be profitable with us. Thank you very much for watching us, and catch you next time.